So yeah, Aidan's here. He's going to plow through the presentation for 12 or 13 minutes, and then we're going to have some Q&A, and I'm sure we're going to have a lot of it for you today, Aidan. So I'll sign off and let you rip through it.
Right, well, I'll pop the slides up in here in a minute. So actually, I think you were saying 4 years. So I've presented at Kinvestor, I think, for the last 3 years.
Yeah.
So thanks for the invite. Great to be here. But I can tell you, my man, and you know this from me most recently, this is literally the most exciting time in this company's history. So like we have a fully constructed and fully commissioned first commercial facility. We have outstanding quality products coming out the back end. We're ramping that facility up now to hit production targets and cash flows. Our expansions look great in Ontario and in the US. And I'm going to talk today about the path to $1 billion for this company.
Love to hear it.
Okay, so let me pop these slides up. There we go. All right. So look, I mean, most people have a good idea. Usual forward-looking statements. Most people have a good idea about our business model. So I've got some props with me now. For this Kinvestor. So we basically take asphalt shingle tiles that either are manufactured waste or that come off roofs, and we split it up and turn it into their individual products. And so now, because we have a facility that's commissioned, I can show you individual products. So this is literally the pellets that are coming out the back end of the facility in Calgary. And this is the highest value product that we have. And I'll kind of trip through this a little bit as we go. So today's all about kind of like, kind of updating everybody in the business model and chatting a little bit about where we've been since the last Kinvestor presentation. So I've highlighted some stuff as we go here. So everybody knows the figure. So actually, when I joined Northstar 4 years ago, the figure of shingles destined for landfill was 12 million tons. So it shows you that even though we always talk about 16.5 and we work out our volumes based on that, this is a growing problem. And that 16.5 million is now more than 20 million barrels of oil. As you know, a shingle tile is about 50% sand, about 25% asphalt, and about 25% fiber and limestone. And limestone is something that we've added a patent for. We announced that in September. And the real driver for that was that shingle manufacturers, and more so now than they did in the past, add limestone to the asphalt. So when we were thinking about the quality of the product that came out the back end and reducing the amount of solids that were in our final asphalt, that's what our patent actually does. So it actually takes the limestone out of the asphalt before it comes off the back of the system. And as you guys know, tipping fees kind of 35%, products roughly 65%. And as I showed you, the asphalt that I showed you, that is by far the most valuable, 95% of the value of the back end products. Limestone will be very similar to aggregate. So kind of in the kind of $10 to $20 range that we would expect at the back end. Look, I mean, I've often talked about the partners that we have, and the most important thing with respect, in my view, with respect to the partnerships is not that these are all multi-billion-dollar companies, but I mean, obviously that's huge validation. But actually, every single one of these partners, both on the kind of the industry side and on the finance side, did huge due diligence on Northstar. So as an investor, you know that Tamco's operations team came to the Delta pilot plant. Colas did the R&D and helped us with the design. As we talk about the financial partners, the government. Emissions Reduction Alberta did a full due diligence process. CVW did an independent assessment and report. So all of this really to say that all these people have invested, or we have offtake agreements, and they've done lots of due diligence on this technology. And now the technology is starting to deliver. So Emissions Reduction Alberta, as you guys know, 4 steps in the process with them for funding. Number 1, when we completed detailed design, tech funded for that. Number 2, when we completed construction, tech, funding for that. And now the critical step is commissioning. So the third step for Emissions Reduction Alberta is to determine that the plant is commissioned and has moved into operation. That target, there's 2 things that we have to do for that. So the first thing is bring them into site and show them that everything's operating. And then secondly, hit the target of 80 tons a day. So that's their tick that says, we now believe that Northstar's moved into operation. So that's the critical path for Q4, and that's the thing that we will be delivering. And let me just jump down. So Emissions Reduction Alberta were at site last week to do the first part of that. So to tick off everything's operating, they could see literally shingles going in the front end and pellets coming out the back end. So they came to do that validation, everything completely done. So the interesting thing, and why I wanted to show this picture. So the picture on the left-hand side was sent to me by our lead from Emissions Reduction Alberta. He wanted to show us what the site looked like this time last year. So he came on the 4th of October to do a walk around just of the site, etc., to talk about the plans. And that's what it was, a concrete pad. And when he came last week on the right-hand side, that's what it is now. So his point was, look, going from left or right, you guys have done a huge amount now. As you know, I'm always impatient about when's production coming and, you know, when's commercial delivery and when was it getting constructed and all that kind of stuff. So we've been relentless on the pursuit of delivering on the thing on the right hand side. But that's just a perspective for everybody is kind of, you know, then and now. So plant fully commissioned. You've seen these slides before. Oil was coming out the back in July. Pellets just after that. And now what happens next? So the quality of this stuff is outstanding. The lab results back, the reflection back from our customers, both future customers and existing customers, has been really strong. This looks like a great product, both in the liquid form and in the pellet form. And so now, as I said, the drive is 80 tons a day with the emissions reduction Alberta target, and then to ramp the plant up to full capacity. Obviously, the objective, and I'll chat a little bit about this in a minute, the objective to move the plant to 24/7, which needs 80,000 tons of supply. We're working on all that supply stuff to secure that, and I think that's going to be kind of in 2026. And then the last point, of course, is all around continuous improvement. So as we look at the next, this is not a one-off. So we haven't built a $300 million facility that needs to take shingles from, you know, all around Canada to operate. As you know, this is deployable, and I'll talk a little bit about how that's going to roll out. So criteria that we used to think about, and you guys have heard me talk about this before, when we used to think about assessing plants, we used to think about asphalt price versus tipping fee. That has now changed a bit. The first criteria we now look for is, can we get 80,000 tons of supply in the region that we go to? Because the 80,000 tons enables us to go to 24/7. And the economics of the 24/7 are absolutely critical. So single shift, the original Calgary design, produces a revenue of about 10 million and an EBITDA of about 5. When we have 80,000 tons and we can run the facility 24/7, that's when it transforms the economics to 20 million of revenue and 10 million of EBITDA. And I've added to this slide, so what, okay, well, that's great, you know, nice economics. What is the road to value in the company? So if you take an 80,000 ton facility, we have the expectancy in the model of our tipping fee and our asphalt prices, et cetera, for that facility, and you deliver 10 million of EBITDA. If you think conservatively about the waste of value space in a relatively conservative multiple of 10, it means that every 80,000 ton facility we build, in theory, we will add $100 million to the EV of Northstar. That's the base economics. And so you're like, very good, Aidan. So how are you going to do that? We have to build 10 facilities. This is massively forward-looking. It's all based on the assumptions within the model, et cetera. But this is the pathway to $1 billion, which is 10 facilities, producing 10 million of EBITDA, and actually processing 80,000 tons of asphalt. That's how we think we're going to do it. So then you're like, okay, great. And when are you going to do that exactly? So as you know, Calgary, the driver, of course, is to get Calgary up to full capacity, then debottleneck it if we can, if there's enough shingle supply in the region to go to 80,000 tons. So that will be the first one across the line. You know, Hamilton's next, US one's next, and then we have the portfolio, as you know, with the relationship with Tamco, for the first 4 plants in the US already have secured supply, already have minimum pricing above cash flow break even. So those are absolute no-brainers to deliver in the portfolio. And we need to hit 10 plants to be $1 billion. So that's essentially the story. So of course, every single CEO on this call on this, day to day will say they're undervalued. We believe we're spectacularly undervalued. So we believe we have a plan, and what you should see in the catalysts in the next quarter are, number one, delivering on the ERA production in Calgary. Number two, the announcement of US one. Oh, and sorry, in Calgary as well, first commercial product coming out and the first commercial sales. So yeah, I think that's the summary of the story, Aaron, and I guess back to you for questions.
Perfect. Thanks so much. We do got questions, and if you do have some, please type them into the Q&A box. Let's talk about the benefits of these asphalt pellets a little bit more. Like, where is the pivot from that to that all of a sudden?
I mean, like, my background has been global commodities, and so when you think about asphalt coming out of a facility, we've got two choices here. So we can either produce hot oil, or we can produce pellets. If you produce hot oil, that's great. We can hold it in storage tanks, put it in tankers. It has a logistical distance of probably kind of 3 to 4 hours. So that's a really good question with respect to Tamco's facility in Maryland. So if you look at their facility in Maryland, that basically says we need to have a plant for hot oil that's kind of either in kind of Philadelphia, Delaware, or Baltimore. So the eastern seaboard. So as we've looked at that, we've chosen the state, we've chosen the city, we're working on sites, but it has to be kind of 3 hours to 4 hours nominally away from the Tamco facility. But these can literally go anywhere in the world. So that's the real benefit, is the logistics and market benefit of having ultimate market access when you pelletize these, because they literally go into half-ton super sacks into like shipping containers or whatever, and they can go anywhere. So my view for that was always pelletization. For I can produce pellets in Calgary, and they can be sold in Europe. So that's the massive benefit. There's no logistical constraint whatsoever with producing pellets.
Can you sell them for higher in different markets?
It depends. So, as you know, the pricing that we established a couple of years ago with both the Tamco agreement and the McAsphalt agreement. So, if the quality is high enough, we may be able to sell them this as final product rather than literally an input to a shingle facility. So it sort of depends. The quality looks really good. It looks like we're making final product. So in theory, you'll be able to access markets with a higher product. And so we should see that flow to the bottom line.
Okay. We got a question from Richard. Actually, I had the same thought too when I was running through the slide with you. Why does doubling your plant's output not improve your EBITDA margins?
So because we're trying to be super conservative. So, as you know, I think I use the phrase hand grenade math.
Yeah. Okay.
So the revenue should double. And yes, if you've got the plant manager, the rent, the building, et cetera, so we should, instead of being 5 million, it should be 11 or 12. But as we've been, this is all about, we think we can deliver 10 facilities and $1 billion with a $10 million per year EBITDA. But if it's 12, that's even better.
Yeah. Yeah. So someone wants to know what your throughput is today or your average over the last week. And I know that's not been disclosed. So my question to that is, like, why do you guys not share any guidance or forecast like fundamentals?
Well, I mean, ultimately, I'll just go back to the time that my time at BP, my time at Meg. Every year we would give some degree of once you have operating facilities, so you can give a degree of guidance at the end of the year for the year ahead. We never reported on any startups whatsoever. And oil and gas companies will talk about the targets that we meet. And so that's why it's very straightforward for us to say the ERA target is 80 tons a day. And when we hit that, that's a massive catalyst. And we will tell people about that. I can tell you, as long as I'm the head of this company, we will never be in a position where we're reporting weekly production or anything with except when we bring a plant on in a new facility and it's ramped up, what we think that will do with respect to the aggregate volume that the company's producing. And we need to get into production, right? So we need to have, one facility or three facilities or five facilities, and then at the end of the year, that's meaningful with respect to what production looks like.
Yeah. Got another question from William here. Would the expansion of Delta BC not be much cheaper and faster to complete than a new facility elsewhere? Let's talk about those logistics.
So a retrofit of Delta from a capital perspective is on the is kind of obviously part of our plan. The one thing that we need to make sure though is in terms of offtake agreements, as we've always done, securing the offtake agreement. So those discussions are ongoing with respect to offtake agreements. But yeah, what we want to have is a secured offtake agreement because the shingle supply is there. Now, one of the things that's really interesting about Delta is if we pelletize the asphalt, as you know, the Tawasin export terminal is like 4 kilometers or 5 kilometers from the Delta site. So as we talk to the companies that we're talking to about the potential for international export, we couldn't have done that with hot oil, but we can do it with pellets. So that's one of the kind of the ongoing dialogue points is about international export from Vancouver, but not yet landed, and we're not building a facility until we have secured offtake agreements.
Okay, thank you for that. Any take or pay contracts in your portfolio of products?
So the offtake from Calgary is a take or pay, and the although not a definitive agreement yet with Tamco, that will be a take or pay as well.
Yeah. Not sure if you can answer this or not. Are you selling any of your oil already?
Are you say that again?
Are you selling any of your products yet? Like I know that you're receiving income from the waste dump, right? But like, are you selling any of your finished products yet?
All to be announced through Q4 when we describe our results.
Yeah, okay. I wasn't sure if that was wasn't sure if that you could answer that or not. Okay. We got a question here from Murray. He says, is there not enough demand for the oil in Vancouver, BC area? Like, why would you have to kind of find buyers outside of that area?
I mean, look, there's demand from paving. There's demand from flat roofing. As you guys know, there's flat roofing manufacturers around there, and there's demand from shingle manufacturing. And demand for shingle manufacturing. But all of those need to be secured by offtake agreements. So the discussions are ongoing with respect to Vancouver, but not enough. Not enough from a kind of contractual perspective to sanction the build of the facility. And look, I mean, our board's pretty clear. Sure, like we'll sanction a plant, but we want to see offtake agreements and some degree where we have done it with ICO here in Calgary and Eco Recycling, some degree of supply agreements. Doesn't need to be 100% of the volume, but needs to give us good surety that both are buttoned up. But the real, I'm kind of repeating myself, but the real prize for Vancouver is the export market. I mean, then we could build like 2 facilities and literally just export absolutely everything that we make as a pellet, and could be a phenomenal price.
Awesome. That's Aidan. We got to jump. Great presentation. Tons of questions. And yeah, you're one of the fan favorites out there. So way to go.
Well, look
Keep on
forward to
delivering.
yeah, look forward to delivering this stuff through Q4.
Yeah, right on. Thanks, Aidan.
All right, thanks, Ron. Cheers.
Yeah, bye.